Well, hello, Maverick traders. It's Joe with you here. It's the 4th of June. It's June already. Can you believe that? Let's get into the market roundup. Take responsibility for what I talk about. You guys know how this drill works. I'm going to break down the meaningful news of the day. Let's take a look at some of the technical indicators, and let's share some trades with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
Let's move into our market analysis, and as you guys can see, not a lot of change from yesterday. It's only 2 days into the week, but overall it's pretty much flat. We've seen some pretty corrective action on all of these markets, and I just don't think that we're going to really gain or give any ground, but it doesn't keep these markets from being volatile, which can be a pain in the butt. So let's take a look at how we finished today. The Dow, the S&P, and the Qs pretty much flat. Dow's up 0.36, 0.15, 0.17 for the S&P and the Qs. The Russell down 1.29%. Oil and gold also giving up a little bit as well. We've seen these markets gap up and come back down, so there's a lot of volatility, a lot of push and pull, but not a lot of gain or loss. And what I mean by that, well, let's get into it. Consolidation and flat for the first 2 sessions this week. Corrective moves seen in some sectors, but continuation in others, and that's going to be the main topic of what I talk about today. I'll get back into it. Let me finish this slide here. Advanced decline line, 60 to 36. Above below the 50-day moving average, still teeter-tottering around that 50-50 mark. So let's just jump straight into the SP. You could see that when I put my box up here that I like to draw, yeah, there is a little bit of consolidation above these highs that we set late March. After that little bit of corrective action with the crossover, we're back up above it, so we are still back in. We're back into that bull territory. You can see we're in this range, but it's this small area here, and what I want to focus on are the overall shadows. These shadows don't feel good, especially when you have associated with something like the volume like this from Friday. That was a big gap to the upside, or I should say, yeah, it gapped up, moved higher, went all the way back down, and then came all the way back up. These volatile moves can really, really mess with a portfolio and also give you what I just referred to as false signals. So it's at some point you kind of have to ignore the volatility that's in the specific market and get a little bit more specific to the sector and the overall pattern that it is developing. I'll show you what I mean here in a second. Let's just jump over to the Qs. The Qs is also a really good example of that. You can see here, folks, that we had that massive move on Friday that seemed to just go back and give this nice little hammer candle. Looks like it could be a pullback and a bounce to the upside. However, the inside days of the first 2 days of this week, once again, I know it's only Tuesday, but this kind of push-pull action doesn't really give us much to go on. Now, where do we go from here? Well, there's a few things we can do. The first thing is kind of consolidate a little bit further, and then we can move higher, and then that kind of confirms this nice bull pullback above the moving average crossover, all of that, right? Now, that is kind of what I would be expecting based off the move that we saw off the bottom here in May. However, we could see a little bit more consolidation, and I'll go ahead and draw a box that's super wide to where if you're a Bollinger Band trader, you're in this mid area of that range that I just drew. So it's not a very good sign if we decide to roll over from here. We refer to it as, let's see if I can draw this, a head and shoulders pattern, right? And that is a reversal signal. If it breaks below that 20, then we are going to be threatening the lower range of this line that I drew here, right? Right, okay, so great, Joe, you just told me you got a 50-50 chance of doing what, up or down? Well, if you're at that point, and this is why I like this topic for today, is because I get a lot of emails. Well, geez, Joe, my bulls are going down, all my bears are going up. I don't know what to do. It's because you're in a range-bound market. So what you can do is take a step back, and instead of, hey, we don't have that sentiment that's nice and clear, showing if we're up, down, or sideways, it's a little bit choppy. Lots of legs, lots of moves, lots of corrective actions. We gap down and we go up. So let's micro it. Let's take a step from the big picture and get a little bit more specific to the sectors. Speaking of which, let's just jump into this heat map. You can see, now understand, we did have a bear day today. I mean, it was very light. It was pretty much, let's call it flat. I don't want to call it a full bear day. But we did have more decreasing stocks than increasing stocks, right? We saw that in the advanced decline line of about 60-40 for the day. However, you're seeing a little bit of green here in some of the larger companies. So it's not that the majority of this whole heat map is green. It's just the larger players in it are. So let's get into our outlook. And the outlook is going to stay where it's at. We're above the 20. We're above the 50. We're at that 20-50 slope. However, folks, I'm just going to go right at it again since it's in front of me. And it is this area here that can give some false promises. It is above the moving averages. It is well within that range. It has bounced off of the lower part of my box, but it is absolutely in the middle part of it. For you Bollinger Band guys, this is probably getting tighter and tighter. So, do we roll over from here or do we continue back up? I don't need that question answered. We don't. We're going to keep our outlook based on our probability and our top-down approach. Green, above the 20, above the 50, 20-50 slope, all green. Nice higher highs, beautiful crossover here. That has to be +3, right? +1 is saying that, look, we have bounced off the lower part of that box I drew, and that +1 could easily go to a 0, +1, 0. So if we could consolidate, well, that does not help when it comes to a directional trader. But what does? Well, let's get a little bit more specific on sectors. No potential trades here. Instead, folks, I'm going to jump out with you into a charting software. And let's just go straight into some of these sectors and discuss them. So healthcare for me was, I was seeing a whole lot of weak stocks in it. And I could see that descending here, big drop on this area. But it did set a pretty good little pivot point here. But the volatility of healthcare and this move that's happening right now, to me, because of this top slope, is more of an oversold, overstrong bounce than it is, hey, sustaining trend. Healthcare is going to be up in this area. It might, but it just seems like a reactionary bounce. So for my traders that are saying, I got into healthcare, they're bearish, it doesn't look good, but all of a sudden it just went gangbusters. Well, it did. It bounced very, very hard. It doesn't mean that in the longer term, this thing's going to continue and show strength. So let's take a couple that I have seen that are sustainable. One of them is that communications sector. Communications has been strong for a while. You can see it zoomed out, folks, that it continues to stay strong, even with that push-pull and some corrective moves going on, a little bit of a sell-off last week. This has stayed inside its higher base range and is still showing some strength even later on last week and actually the beginning of this week. This is something that is continuing in its direction. This is where you're going to be okay to say, look, communications, if you want to look for something +1, +2, this is probably where you want to go. If you want to try to get into healthcare for +2, you might want to do it soon because it looked to me like it was in an oversold bounce. This is something that's a little bit more sustainable. And what I want you guys to continue to focus on is we're taking a look at the broader picture in some of these sectors. Here's another one. XLE, energy. Look what energy's done. Energy has been weak for a while. It continues to show weakness. Yeah, sure, it had a pretty decent bounce going into Thursday and Friday, but it did not get above those moving averages and it's rolling over. In fact, this is showing a lot of weakness based on just breaking some pretty major support levels here. Nice little move to the downside. This doji says that it might kind of go sideways, maybe a little bit lower, but this is something that if you're bearish in, just stick to it. It's in a good place and it's showing some bearishness. Let's also take a look at materials since we're here. Materials is very similar to energy, a little bit stronger, not as directional because of the pivot point that it had at this area. In fact, this is almost kind of a reverse head and shoulders going on here. You could see that if this could continue to move higher, we might have a break to the upside there. However, with this gap down today, and if we could break this level here, then yeah, we could see it maybe move this way. So sideways to down in materials. So I'm just doing something that we do every Friday here at Maverick, but sometimes it's best just to go out and take a look at things for what they are instead of just being hung up in your portfolio exposure, right, and the overall market directions. This is XLP, this is consumer staples, and why I thought this was interesting, staples and defensive, I saw a pretty good move, and it is a solid move. A good bounce is off of its 50-day moving average. We've seen this happen before, right? We saw it hit the 50 here and really take off. This thing doesn't like to pull back to its 20 too often, does it? It pulls back pretty deep. Even back in these areas, it was somewhere between the 20 and the 50. So this is a pretty decent move. I'd like to see more volume behind it, but being a +1 in this makes total sense. A 0 to +1 if you think it might roll over here, that's completely fine. All right, just for fun, folks, let's just take a look at one more here. Let's take a look at technology. I got to look at this. Look at the difference between technology and communications. The communication sector's up in this range, moving higher outside of its box. Technology, yeah, it's got a lot of really good stocks in it, but it is a different story. Remember, communications was up in this area, the higher range of its box. Look at the gap that this had down midweek last week. Big shadows, however, it's at the lower end. It's showing something a little bit more anemic. In fact, in some of the tech sector, I would rather be 0 to even -1. So if you guys have some negative plays that you're worried about that have bounced, hang in there. Believe in the sector outlook, believe in the charts, and to try not to really overthink it. All right, folks. I hope you enjoyed my little deviation from norm. Sometimes it's best to take that step back and take a look at things, especially with tumultuous markets that aren't going anywhere. I get a lot of questions of, oh man, I'm picking the wrong stocks. They're all going the wrong direction. Well, you got to either believe in the situation you have and understand that it's playing itself out, or in some situations, like if you're short communications, that's a bad place to be. Communications is showing some serious strength. If you're long energy, that might be a bad place because energy continues to show weakness even when it does have its small bounces. The markets remain volatile, but not giving or gaining much ground as they remain flat so far this week. We've been talking about this for 2 weeks, thinking that we're going to get into the beginning of the summer and the market should stay within a range, and so far they have. However, it's that volatility that I wanted to address in today's class. Not much for the overall sentiment to move on. There's not a lot of focus when it comes to economic reports or things to get excited about. Relative strength and weakness is the only thing we can really focus on in specific sectors. Unfortunately, folks, you're going to get the darling stocks. When you get an idle market that sits on its hands, you're going to get that stock that just takes off for no reason or one that just gets beat down for no reason. It's boredom. It really is. And going into the summer, we should see more of that. Economic-wise, we're not going to get much. ADP employment services, PMI, jobless claims, and unemployment. There is arguments to be made on both sides. We're seeing an increase in manufacturing, which could be good, but it also shows stimulus or could be more of a lean on inflation, right? So it cuts both ways. We'll see where that goes. As always, check your potential trades for earnings. Corey had a few that we looked at yesterday. If you guys want to, you can always go earningswhisper.com. You can go onto a website and just type in the date or the ticker you're looking for, and it'll pop right up. But always be mindful of it. All right, guys, that's all I got for you today. Thanks for joining me, and we'll talk to you next time. Bye, folks.